Hey, are you running multiple businesses through one limited liability company? You know, it might seem like an easy option, but the problem is you could be exposing yourself to unnecessary risks. So in this video, what I want to do is I want to break down for you how to limit your liability if you have multiple businesses you're running through one entity. There's nothing wrong with it. You just got to make sure you're doing it the right way. And at the same time, by limiting your liability, you can also keep your taxes simple. All right, let's get started. So what am I getting into here about this? Well, it actually came from a client that reached out to me who was concerned about the potential liability of a business structure this client had set up for their multiple businesses. And what they did was what I see a lot of people do if they have one entity and they want to engage in multiple types of activities. They'll set up this company, maybe this is a limited liability company here, and then what they'll do is they'll run activity A right over here under this business name. So let's say the name of this business is Life Protect, okay, LLC. So they have Life Protect Limited Liability Company, and they're using it here to maybe market, in this case, it was supplements. Okay, so they're acting as a drop shipper for supplements. So that's one of their businesses. Now they have this completely other business over here. We'll list it as B, again, running under the exact same name, Life Protect LLC. And this business was let's say it's a service-based business, okay, that they had. And they actually had a third activity as well over here. This is C, and that was an Amazon type shipping business where, you know, again, they just drop ship product. So they had these three different business activities and they're all run under Life Protect LLC. Now, when we had our discussion about this type of business, the reason why they set it up this way is they wanted to keep it simple, right? They wanted to keep it simple because all of the revenue flows into this one company that has these three different businesses arms that they're running out of. And so it goes into one bank account. They have one tax return they have to file. Making sense right now? If you've got a business set up with multiple businesses that you're running underneath it, that's probably why you did that. What I want to show you now is how we went about correcting that, okay, for them, because they recognized they had a significant amount of liability exposure. Because this supplement business right here, right, that's huge liability. You're selling supplements to people that if they ingest it and something happens, maybe they have an adverse reaction, well, they're going to sue the person they bought it from. So that would put this company at risk. And then that puts at risk these other two business lines. So understanding that they wanted to keep things simple from a tax and accounting standpoint, but they also wanted asset protection, the strategy then was to take the supplement business and create a separate LLC for it, just like this. And that LLC would be owned 100% by Life Protect. So now we created this LLC for the supplement business, and the LLC that we set up, it does not use the same name Life Protect. It can't, because you can't have, you know, two companies with the same name. I guess you could if they're in separate states, but it then makes it a challenge to obtain an EIN number. So we gave this second company, we'll call this one Red One LLC. We gave it a different name. Now, of course, he's built up his marketing with Life Protect for the supplement, and he said it was really that's really tied to that business, and he wanted it to stay there. So when we set up this business, then we licensed the name to Red One. So we entered into a license agreement, and we did this again because you want to make sure that by setting up this structure to isolate the liability up here, that you're dotting your I's and you're crossing your T's. And so in order to license this name, you have to put together a license agreement, right? Because if your business was sued and they said, all right, you're operating under Life Protect, how are you doing that? Your name's Red One. Oh, well, this company here that is set up as Life Protect has allowed me to use your name. Show me the paperwork. Well, if you don't have paperwork in place showing that you've documented this, that's where you open up exposure to piercing the corporate veil. That's why that aspect I just shared with you is so important if you want to do something like this. So now Red One is operating, we call it DBA, doing business as, not Life Protect LLC, Life Protect. So see, we kept it up. Now, the second step we had to do, we had to get a bank account created under this entity. All right, so it needs to process all of its own money under Red 1, doing business as Life Protect. And so we give the bank the name Life Protect. So then the merchant accounts, everything will come under Life Protect. That's what will show up on the receipt for the customers, even though it's owned by Red 1. Now we've isolated this activity. But here's the thing about this LLC that we set up. It's disregarded, okay? It's a disregarded limited liability company. So what does that mean when I say it's a disregarded LLC? It means that from a tax and accounting standpoint, can we keep this simple? The answer to that is yes, we are, because all of the income is going to flow down and show up on the tax return for the parent company. So this parent company now will file a tax return because this happened to be set up as a S corporation. So we have one tax return right here, one federal tax return, but not up here because this entity is disregarded. So what about these other two businesses over here? Well, I recommended, since we moved into this type of structure now, it would be best if we did the same thing with those two businesses. Now, because the liability on this service-based business and the Amazon stuff was really low, we felt that we could separate or keep these all in one additional entity rather than having two entities. So we created a second entity over here, another LLC that's owned 100% by this parent company. Again, this one is Crazy Dog LLC. So we set up Crazy Dog LLC, and it's running activity B and C through it. Now, again, we're not operating Crazy Dog. So he's already marketing his service-based business under Life Protect and the Amazon stuff. And what I recommended we do here again is enter into another license agreement so that this entity can use that name, DBA Life Protect. And then for the other activity for the Amazon, I said, maybe we should come up with a second DBA. So really this company, Crazy Dog, had two DBAs now that it's operating under. The Amazon business has its DBA. So let's assume that the name there was the best products you can find. Okay, so that's the company that he's operating under, best products you can find for the Amazon stuff, and then Life Protect for the financing stuff. So there's two DBAs under this Crazy Dog limited liability company. Now the same thing applies. We open up a bank account here. This entity is disregarded for tax purposes, and so everything flows down to here. So where did we create these various businesses? Well, these businesses, if you have an active physical location where you're conducting business, then they're set up in the state where that's taking place. So assume that you're providing financing or these services in the state of Colorado. Well, since that's where you're providing the services to people, this needs to be a Colorado LLC. That's what we would set up. Now, the supplement side, it was all online. So the supplement side, we set this one up in Wyoming. There's no reason why we had to have it in Colorado because it's not conducting business in Colorado. It ships all over the place, and it only has a virtual presence, a virtual storefront there. So we made that a Wyoming LLC. Now, this initial LLC they created it in the state in which they're residing in. My recommendation to them was to move it. Okay, don't dissolve the company. Move it to either Delaware or Wyoming. Move it out of that state. Now, if you're wondering why I said Delaware, because I typically talk about Wyoming, it's one of those things now where you get down into the weeds of the strategy. What are we trying to accomplish, and how obscure do we want to make it with the overall planning? Maybe I can cut another video on that, Delaware and Wyoming, how to use them. But in this case, I made that recommendation that we move it out of his home state, put it in a different state. So if you have an existing business right now and you're running multiple business lines through that one entity and you're thinking about, hey, I see that I have some liability exposure here and you want to reduce that, well, this is the way you do it. You set up disregarded single member LLCs that are owned by this. These entities here can be either manager, member managed, depending on what you're looking for. And meaning, do you want anonymity or you do not want anonymity? And that's something that, I talk about a lot on my channel, the importance of it in building a structure around anonymity. Definitely for the supplement side, we wanted anonymity. That's why we went to Wyoming. On the service-based side, where you're dealing with people, well, the anonymity is not as crucial there because they know it's your business. So that wasn't my concern there. And again, we set it up in Colorado, of course. So and they were listed as a manager. So we had no anonymity on this side. So these are some of the things that we look at when it comes to building out a business that has multiple business lines through it. It's easy to change. If you've already been doing this, we can set this stuff up and roll it back in and get yourself some protection that you need here in 2025 for your multiple businesses. Hey, if you've got any questions about these strategies, be sure to go down into the comments and ask your questions. You know, if you've been a subscriber to my channel, I answer all the questions that come in from people who view this. I see this as a great opportunity for you to get your ideas out there and understand how to structure it the right way. But more importantly, what I love about the questions is that it gives me ideas for content. So keep it up. Be sure to go down there. If you're not yet a subscriber, hit that subscribe button and be sure to like the video, of course, as well. Thanks. Take care.